Hi everyone, welcome and thanks for coming. Very happy to be here to give a brief introduction about myself. I'm doing global business development for BNB Chain, and basically what I do is help projects build on BNB Chain or migrate to BNB Chain or go multi-chain with BNB Chain. I'm really happy to be here and more than excited to connect with the VCs and the projects that are willing to do something with BNB Chain. I'll give it over to you.
Hi, everybody. It's great to be here. I'm Shafeeq Qureshi. I'm the founder of the cryptohub.com. What we're building is a one-stop shop for cryptos and Web3, focusing on connecting early-stage startups with investors and building an ecosystem for the wider crypto and Web3 community. In the past, I worked in the financial markets. I used to be based in London. I've worked with a lot of banks and trading companies. And in the last 4 to 5 years, my focus has been on the crypto and blockchain scene, where I started initially with a crypto exchange that I was trying to build with some other people. Currently, I'm based in Dubai, and I'm back in Istanbul after a long time, and it feels like a very exciting time to be here. And I'm looking forward to meeting a lot of you here and building new friends and ties with the communities here. Thank you.
So, hello everyone. I'm Mete Elmas, country head of KuCoin exchange. Probably you heard before, right? Is there anyone who haven't heard about KuCoin before? Okay. KuCoin is an exchange, cryptocurrency exchange, centralized cryptocurrency exchange, and based on the CoinGecko data, it's one of the top 3 exchanges based on the trust score in the world. So basically, I'm based in Istanbul, Turkey, and I've been working for KuCoin for more than 1.5 years. And before that, I was working for a local crypto exchange in Turkey, and in the sideline, assisting some Web3 initiatives for incubation, for fundraising, etc. And before that one, I was just like many others, I was in the real sector. I was in the automotive sector, working for Mercedes-Benz. That's all about my story, I guess.
Hey guys, Calvin here. Sorry if there's a bit of lag, but I really appreciate all the organizers for letting me dial in. Sadly, couldn't make it to Istanbul this time, but I'm Calvin from Impossible Finance. I actually also spent 3 years at a centralized exchange, so it seems like we've got quite a few folks with centralized experience, having spent 3 years on the listing and research team back at Binance. So if any of you have ever participated in a Binance Launchpad, there's a good chance that I was a part of the research and due diligence for that. And then now have spent 2 years helping build up Impossible Finance, which is a decentralized incubator and launchpad. Really happy to be here. Thanks.
All right, guys, the first question is, so this is not the first time we're going through a bear market. As you know, there was one after the recent ICO boom. Can you please compare then and now the differences that you see?
Should I start?
Please.
So I think there are definitely a lot of differences. One of them is obviously what we've seen in the last bull market, which was the 21 year. There's been a lot more mass adoption of people who have come on in this crypto and Web3 space. So the 2017 saw an explosion in this market. I think we went almost to $1 trillion in this space. But then there was a downturn, and we saw the first winter, or one of the first major winters, where I think BTC went all the way from 19,000 to the lows that kind of lasted almost until 21. So for me, I think the biggest or the most significant aspect of the change is the mass adoption, which we saw happening in 21. And obviously now we're in the bear markets, and we're trying to figure out how long this is going to last. Obviously, in the recent months, we've seen some good signs. I think the last few days and the week has been good for at least BTC and and Ethereum. The altcoins still seem to be struggling, but yeah, so I think the market is still at an early stage. We need to understand that. We will see volatility. It has gone through some hard times last year with a lot of the setbacks we had with all the way from 3ACs, Luna, and then FTX, which was a major setback in November last year. So considering everything that is happening, I think we are still in a place where I feel it looks good. I mean, it might be too much for some people to say that, I think the markets are still good. But this is part of the evolution, and we're heading in the right direction, I believe.
For me, I mean, when we think of the back in 2017, mostly, I mean, crypto geeks usually call it as ICO boom in this bull market. And for me, the reason after the after bear market lies down in this definition. For me, in my humble opinion, there are two main elements which makes even, I mean, either a Web2 or Web3 startup or initiative: product and marketing. And when we are specifically talking about Web3, we can replace the word marketing with community, right? The bull market in 2017 was led by primarily community, but the product inclusion was limited, in my opinion. So a lot of projects, many projects have been funded with huge amounts without a working product, or even without a clear roadmap to how to utilize that amount of funds. And after the show didn't go on, and the lights are turned off, and all the, let's say, hype is faded, Bitcoin, including Bitcoin price, all the cryptocurrency prices has plummeted as investors lost their confidence in the crypto market. But when we look at the current bear market, I don't know if it's correct to call it as a bear market, but for me, yes, it's still a bear market. It has some different roots. Crypto market currently is more mature, more regulated, but this regulation part also lets some increased scrutiny from regulatory bodies due to, let's say, some, we can say, suspicions or concerns about potential crackdowns. So currently, we can say that these two bear markets are uncomparable because of the matter of occurrence. For me, right now, the bear market is more healthy bear market compared to back in 2017. This is my humble opinion, I guess.
I'll leave the audience with maybe just one stat to add how different it is. For us in DeFi, today there's more than tens of billions of AUM on actually multiple chains, not just one. Last bear market cycle, there was not even 1 million on any chain for the size of DeFi. So our space has already actually come quite a long ways. I think as a whole, the magnitude of funds held on some of our technologies is maybe more than 1,000x. And so I think that's something that's, I think all of us are quite proud of having helped build a part of that. And I think it also shows a long ways to go for us to build throughout any kind of bull or bear market cycle to continue that momentum and further scale our industry as a whole.
And in my opinion, this was not the last bear market, most likely. And each of them, come with, of course, pros and cons, but there are really important learnings at all of them. First of all, I like this saying, whatever doesn't kill you makes you stronger. So it's, more like there are learnings and there are reasons why the price goes up and down. Which one of those are, stable reasons that will, continue to be efficient over the price, and which ones are ones that we've just thought, for example, is centralized exchange going down? Does that really hurt Bitcoin's fundamentals? Does that really hurt the industry? Does that really hurt the blockchain technology? Probably not. So that was a learning point, I guess. And there are multiple other ones. Other than that, obviously, in the bull market, everything was easier, and projects were finding funds much easier. But I don't know if that's a good thing either. You know, if the proper due diligence is not done, and then users are investing without knowing the fundamentals and what they're investing in, I think that also hurts the ecosystem as well. So there are of course learnings, and now I think we have a full house in events when we go. So I think people feel more secure and have an understanding of what's permanent and what's not. So that's my opinion. The second is, what is your particular experience with the fundings of startups after the peak in the market in 2021? How is it going in your opinion?
Obviously, I think the last 6 months have been pretty tough, as we know. I mean, there's no hiding it. And I would like to re-emphasize, we know the market is evolving constantly, as you explained, and it will possibly go through further bear markets and and ups and downs. But the current scene for funding has seen shortage of liquidity, and it has also scared some new investors who would have wanted to come into this space, because you have people who have been in this space for the last, say, last 5 to 8 years, who have seen the previous markets, the ICO boom and the bust, and they're more sort of hardy. They're like sort of crypto maximalists. But at the same time, what we saw in 21, we saw a lot of mass adoption happening. So there was a lot of newcomers in it, both retail and institutional. And with the setbacks that we saw, it has taken a lot of the confidence out of the market, and definitely a lot of the startups are struggling. But having said that, there is a blessing in disguise, because this has also been a time where a lot of the projects, or generally as a community, we can focus on building. And we've been hearing that the focus should be on building, the focus should be on the product, because as you just mentioned, in the previous bull runs and during the boom of the ICO and later, like 2021, we saw a lot of projects coming in. And in my own experience, I think there was a lot of times even investors were lacking proper due diligence. So everybody's in a rush to make quick money. We got used to terminology like 20x and 100x and 200x's. Yeah, those are great things. Everybody wants to make that kind of money, but that's not always realistic and sustainable, because if we're talking about building real businesses, then we need to focus on building products, right? We need to have sustainable marketing strategies. Hype and buzz is good. It is part of the industry, but you cannot have a growth, like sustainable growth, just on hype and buzz, right? And we saw like a lot of meme coins and everything else coming in. Now, going specifically back to what you asked, I think, yes, we're going through a time which is tough for fundraising, but it's a good time to reflect, both for people who are building projects and investors, and set in the right methodologies and systems in place which will help us be prepared for the next bull run. I mean, what we're trying to do is, with the Crypto Hub, we're also trying to make a system where we can help our investors and projects. For the project side, we're helping them understand the right methodologies, the right systems, how to market themselves, not just look at the short term, not like the hype and buzz and pump and dump sort of scenarios, but look at more sustainable strategies. For the investors, I think there is definitely a need to understand projects, founders, the backgrounds of how a project can be made successful. It's not just like a 2-page white paper that was the case during the ICO era, like where you would have a 2-page white paper, a roadmap, and everybody was just jumping on the bandwagon to make a quick buck. So I think there will be some good things coming out of this whole bear market and the winter we're seeing. More mature products, hopefully, and definitely more due diligence, and and a more mature market as we evolve, hopefully coming to the next bull run.
Thank you.
I mean, I guess I'm the only one who is representing an exchange here, so I would like to make some comments on the exchange perspective. For me, basically, the smart money is still there. Funds are still there, but they are waiting to be convinced, let's say. in KuCoin and in many other exchanges, we have seen huge growth, enormous growth in 2021. More accurately or more specifically, KuCoin has experienced 11x growth in 11x increase in user growth and trading volumes. Of course, like many other exchanges, this enables us to make more money, like any other exchange. But I can easily say that KuCoin was one of the actual winners of the last bull market. And when we look at the process after this bull market, yeah, okay, exchanges have made the money, but then they should be returning a significant amount of that money to the ecosystem. Because at the end of the day, as let's say, huge actors in the ecosystem, our mission is to expand this ecosystem, grow this ecosystem. So we did so. In our incubation and research, let's say, initiative, KuCoin Labs has initiated a $50 million worth of ecosystem fund to help high potential projects to develop more solid products. I think this should be done by any other competitor or any other actor in the ecosystem.
Thank you.
Yeah, speaking of, I guess, the venture in collaborations with exchanges, I think coming from a launchpad ourselves and on our incubation side, we've actually done 2 launches in bear market, actually with KuCoin. For 2 of the projects that we launched, we were able to allow users to purchase on both Impossible's website and KuCoin's website. So I think actually in this kind of bear market, it's actually kind of tested like which people are here for the long run, and which people are looking to actually support these ecosystems, as you mentioned before. And I think actually as of last week, Impossible actually did its largest sale ever in the last 2 years, actually last week. So I would also echo the sentiments of actually we're seeing a lot of positive momentum across the market as long as you're willing to sacrifice the time to build an ecosystem and reward the users that your product and your ecosystem are serving. So I don't think that if anything, bad markets doesn't mean that we can't do things. If anything, we just have to focus harder on supporting the projects and the ecosystems that we're supposed to serve as big players within this space.
Thank you, thank you. So as BNB chain, we don't do direct investments, but we have a network where we try to help projects find VCs. We can refer them to the VCs that we've been working with in the past, including Binance Labs. And we have also ecosystem grants, which is not really like an investment, but also just to help the project grow and the ecosystem benefit from it. Obviously, it's tougher, not just for the Web3 world, but also the Web2 world when it's a bear market. People have more fear. It's not really easy to put your hand under the rug. But are there things happening? For sure. I talk to on average maybe 15, 20 projects a week, and I see a lot of good investments happening, really exciting stuff. And it's also like encouraging more once you see that people are more focused on fundamentals, and also the due diligence is done much better. So I think overall, is it good or bad for the market when people are more careful? I mean, time will tell. It's not a good thing, in my opinion, when there's bull market and then people just throw money without being cautious of what they're investing in, what's going to happen in the future, and what they're expecting other than a hype. So maybe it's more healthy for the industry. And so do you guys recommend startups to have private or public funding rounds, since considering the market conditions? And if they do, what are the things that they should be considering? What are the elements that they should think about before doing that?
I think definitely the startups need to know where they are with their product, because a lot of times what we've seen during the bull markets is that startups are focusing so much on just the token side of things, focusing on the TGE. Obviously, that's good for exchanges, and for some people making money. But there has been so much focus on the token and getting the token live and going to the market and then just marketing, focusing on that the actual product gets neglected. And that's why we see so many projects failing, basically, because the focus was not on the product. Even though when you're selling a product, right? When you go to your investors, you sell the product. And you raise money through the tokens. So the tokens have been mostly a means of raising the funding to build the business that you're trying to build. Of course, tokens have utility, and that's a separate discussion. But currently, I think I would advise, and the projects that I'm advising or working with, or have been advising with, a lot of them have postponed their go-to-market, their token generation, going to the exchanges. For obviously everybody's waiting for the right time, so the markets should have the right sentiment, and that's important. I think that's important in the short term and also long term, because of course we are in the business of tokens, and if you launch your token at the wrong time, then it could be a bad start. But at the same time, I think what is very important is for all these startups, they need to focus on sustainable marketing and strategies. So then the holistic picture, the overall picture should be, where is our product? What is the product strategy? And, and tokens is just a means of getting there. So with that in mind, I think, yes, they should focus on raising money, doing their private sales, and but at the same time, there is no need to rush into launching the tokens, because I think we have time for that.
Thank you.
Actually, first and foremost, I would like to, I wouldn't like to limit crowdfunding efforts of Web3 initiatives with tokenization. Of course, there can be tokenization or cannot be, can be not, I mean. So we've already seen many Web3 startups who didn't realize the tokenization, but rather different funding methods. It's just a way to going crowdfunding. So currently, in my opinion, there are few factors that is mainly affecting the crowdfunding efforts. The first one would be definitely market condition and the market sentiment. You should know your uniqueness, and you should definitely consider the if market condition is suitable for your type of projects to get crowdfunded or not. Second would be project progress. I mean, there are many Web3 initiatives or startups whose founders are still like unrecognizable, or who are still stealth, I would say. Does your project have or project team have a strong track record, or a working product, or at least developed in a certain level? So this should be another consideration. And third would be the competitive landscape. What makes you unique? I mean, what's your standing point? What's your value proposition compared to your rivals? Of course, if your product has some uniqueness, this would attract more funders, more crowdfunding. Fourth would be, I guess, regulations, of course. The regulation is taking a huge part in the current bear market, so you should be definitely considering regulations of the related jurisdictions, and definitely should avoid any financial crime while trying to make crowdfunding. And last but not least, I believe, maybe working product is a step, but as we mentioned before, let's say a huge community, a passionate community is another step. Maybe you have a very strong product, but you have to get people noticed. This would be the last, but another important step for me.
What about the difference, guys, just before we pass on to your apologies, what about the difference between public and private sales right now? Do you have like any suggestions on the projects right now for which one is more beneficial and why in terms of that?
Well, I think usually the roadmap consists of private sales leading to public sales, and they're dependent on each other, because if you have the private investors who are investing in the private sales, they want to see returns and they want to see progress in terms of the value of the assets they're investing in and the projects they're investing in. So unfortunately, like it's like a catch situation. What comes first? And obviously, if the projects are not going live and there will not be any public sales in the foreseeable future that has an impact on the private sales. I've seen it like in a lot of projects practically where investors, after making commitment, they put on hold their commitments because the projects had to delay their public sales. So, obviously we have to keep on trying, we have to build, because a lot of the projects, they had raised a lot of money last year, but then their burn rate was very high, and, they had to deal with different kind of challenges. A lot of them, have to raise money again. So, I think definitely the focus should be on private sale, but it is dependent on your roadmap and when you're going public as well.
Thank you.
Yeah, I mean, referring to the last factor I mentioned, community and product. Usually, as far as I've seen, private sale rounds or private funding rounds are being made to enable operations go on. That is a real monetary funding that project teams needed. But usually, public sale is for community building. Like a small amount or a small percentage of the total funding comes from the public sale, but it enables projects to get heard, just like I mentioned in the last factor. So they both need it, in my opinion, but of course the, let's say, order or let's say the lineup should vary in terms of the characteristics of the project.
Thank you.
100% agree with that last point. In fact, I think in Possible, we've actually gone a little bit extreme. In fact, actually, we've had some of our projects that have launched the product fully on mainnet, had some real traction and wanted to get users out of this kind of exposure out of a public sale. And so actually some of our project teams have actually been able to successfully do a public sale prior to actually doing further private fundraising, due to how some of the funds out there have become a lot less aggressive in participating in any fundraising whatsoever. Back in last July, we did a launch for a Vietnamese team called Aura Network, and they actually were not I would say, in a position where they needed a lot of fundraising, but rather their mainnet was ready to go and that they wanted to get some more users out of the public sale. So they actually did a public sale first, and then they were able to actually close another $4 million in strategic fundraising after the public sale as well. So I don't think that, as the rest of the panelists have mentioned as well, that it's not necessarily a one or the other. There's benefits to different ones for different reasons. And I would also challenge that the order, when done in a manner that platforms such as Binance or KuCoin or ourselves, where we have users that trust the due diligence process that we go in to give these high quality deals for our users, that then the users maybe look less to private investment as a source of signaling, but rather as something that is more about the sustenance of the project, such that it does have the runway to be able to build, just like our other two panelists mentioned as well. And I think it's a fight for survival during bear markets, and anything extra is a luxury that a lot of teams don't or should not be looking to have, and that by being able to extend runway in whatever means possible, such that they can scale their product and continue building, is probably the most important piece. So I think as long as you're thinking about the way that you're fundraising in terms of extending runway, I think that's the most valuable way of approaching any types of fundraising, public or private.
Thank you. So I don't think that I'm in a position to give like direct advice, but when I look at the projects, if I was a founder, I think it highly depends on the position that the project is in. So further details is really important about the project when it comes to this. But I would probably consider both, keeping in mind that private sales are better for networking, the network that the VCs have, the introductions they can make. And then public sale is good if you have a strong community, then there'll be more of a interest, more of a maybe PR marketing side. So after doing the due diligence of the cards we have in hand, depending on the project, I would try to go for both, as I mentioned earlier. And what to take into account is fundamentals, having strong fundamentals and having a strong community are proven things that basically help projects. So those are the two that I can suggest all the projects and the managements. And final question, so no business cycle, lasts forever. It's never unending, also market cycles. It will be replaced with positive outlook in the end of the day. So what do you guys think of the next few years ahead in terms of like the crowdfunding market? How will it go in your opinion?
Yeah, definitely. I think, we are, like we know, we are in a very nascent market. This is a very early stage. We're still growing, in the cryptos and Web3 and the blockchain space, the world of decentralization with DeFi and all the other products that we have. And it's only, I think it's just a part of the process, what we're going through. And we will have, I think, few more tough years probably. It's not the last bear market we are going through. And, but the whole philosophy, I think, right now is navigate through these times and keep on building and focus on, the next bull run, basically, when we should be prepared with the regulatory environment, hopefully, which would be more favorable because there's a lot of regulations happening, and that has been one of the challenges. But at the same time, you cannot completely avoid regulation. You just mentioned that, because we're living in a world where regulation is important as well. We need to safeguard the interest of consumers. So we just need to find the balance between how we can evolve in a manner where regulations don't kill entrepreneurship and growth of the technology that we're trying to build here. So yeah, I think we just need to be positive. Like you said, what doesn't kill you makes you stronger. So definitely, I think people who believe in the space, people who believe in the technology, need to also understand that we will have a few more cycles of evolution. We'll go through ups and downs, but we've seen that in other areas, like the dot-com boom and bust of the early 90s and 2000. That's a reflection of what we have gone through, and this is a very similar sort of a space. I mean, technology is technology, so we're trying to harness the new technologies that we have. Now we have blockchain. Now people are talking about AI and other things, and I think how everything is coming together, we are, we're in good times in terms of the evolution of this space.
Thanks.
Yeah. I mean, in my point of view, it's really good to see that the balance is being more found between product and community duo. So right now, due diligences are being made more carefully. So only community is not enough, only product is not enough. But at the same time, I would just skip the cliche part. We all know that we are in the early stages of crypto adoption. And as long as the crypto adoption increases, of course, crowdfunding of the crypto space will be increasing. But first point is this balance between product and community. That would be the important take of those bear markets on my side. And the second would be actual realization of DeFi, decentralized finance. If we are talking about DeFi, definitely crowdfunding is the best methodology to projects to get funded. And we can all see that DeFi is also surging to highest usage rates, highest inclusion rates. That would be also another remarkable sign that crowdfunding will continue to grow.
Thank you.
Yeah, I guess you guys both made some great points. I think I'd only add that in general, the amount of users that are in a good position to make good decisions for themselves will always continue if we do more as an industry to better educate all the users out there. Back when I was at Binance, I contributed a lot to the Binance Academy page. So if anyone has ever watched any of those explainer videos to know, what is proof of stake and all these things, I think that that's actually really important to make sure that users are informed about what they invest in. Most users won't make a good investment if they don't know what they're buying. And I think that as we do more as a sector to teach those around us to understand more about what is happening within the space, every day, obviously there's new technical advancements that different teams are bringing to the table. And I think that's exactly what we've all said here, that it's not going to be only product or only technology, and not only just community, but a combination of both will be what hopefully helps project teams succeed the most. And so at the same time, as a space, if we're doing more to put together the materials necessary to teach users about what they are purchasing, then of course the crowdfunding space will also correspondingly grow.
Yeah, in my opinion, when it comes to bull markets, it's much easier for more people to attend, that's for sure. But in the end of the day, again, due diligence is, I think, much more healthier than the hype, than, listening to what people around you are saying. So I would rather see people believing in the project's fundamentals instead of just, investing in them because of hype. And, in the end of the day, if people are just investing, really easily, that means the chances of them regretting later is higher. So, we don't want people to come to the industry and then, act without, thinking on it and then just regret it later. So I don't think that benefits anyone in the long term. So obviously it's harder, but, tough times create tough projects and tough people, they say. So I think, it has some ups and downs. It's going to be more difficult, but if you have investors that believe in your future, the value that you're bringing, then I think you're going to see the real progress and the real value there.
It's good to see that projects are getting robust to the external factors, right?
For sure, for sure. Yeah. Thank you, guys, all from my part.
Thank you
Our
very
pleasure.
much. It's a pleasure.
Thank you.